Dr. Zandi, you lay out these series of ideas for things we can do on SBA, including raising it from $2 million to $5 million, going from 90% to, I think, 97.5% guarantee. And one of the questions that we need to wrestle with is how much skin in the game there needs to be to have wise underwriting decisions. 97.5 sounds very close to a 100% loan guarantee. At what point do we lose the value, the expertise that our lenders have in judging the wisdom of a loan?
Yeah, excellent point. And that's certainly one key reason I wouldn't do this for very long. I would only do it in the period where I felt there was a very severe credit crunch, that the lending market is not working at all. And that would characterize now and through most of next year. I think I would also be very careful which lenders I would engage with. So I'd be much more cautious in stipulating that these are lenders I've worked with in the past. I've had good track records with them. I know I'm going to be working with them in the future. So I am confident that they will do good due diligence and make good loans. So I don't think, because you need to guard against the possibility of fly-by-night lenders coming in and taking advantage of this program, so you need to stipulate the lenders that you're willing to work with.
Can you comment on the degree to which the SBA program has been more of an instrument utilized by larger banks than smaller community banks, and if smaller community banks haven't taken a kind of full measure of the opportunity of the program, why that is the case?
Well, in terms of the dollar amount, you're right. The bulk of the SBA lending is done by the big banking institutions. I think as a share of total assets, it's more comparable that the community banks, the smaller banks, are participating. It's just they're small and they don't have the capacity, the capital or the liquidity or the other capacity to extend out more credit.
Okay. Thank you very much. I just want to say that the stories that all of you have presented are very much in line with the stories I'm hearing from back in Oregon. And if we don't figure this out, how we're going to restore lending directly to small businesses, the factories of innovation, the factories of creating jobs, then we're truly going to be in this recession. And I realize, Dr. Zandi, you said it had technically ended, but on the ground, until we start creating jobs, I don't think any of us feel, or our communities will feel, that we're back on course. So I really appreciate you sharing your stories here in this forum as we wrestle with this. And I do appreciate Senator Boxer making reference to the Banking Our Communities Act. This is a direct effort to overcome one of the catch-22s in which community banks have been telling us that they would like to make additional loans, but that their regulators are telling them that to create the appropriate reserves, that they're restricted from making additional loans. And I kind of heard an echo of that in a couple of your stories. So by recapitalizing smaller community banks that are close to the community and have close relationships with our small businesses, and doing so in a manner that would leverage private investors, because part of that catch-22 is private investors have wanted a symbol that these banks are going to survive and be viable. That's where this bill goes to the heart of that and what we're trying to accomplish, so that they can say to you, thank goodness we're recapitalized. We have permission from our regulators. We can now make loans again and continue the relationship that has worked well for them and well for you. Thank you.
Thank you very much, Senator Tester.
Yeah, thank you, Mr. Chairman. Thank you for the hearing. And I, too, appreciate the work that the small businesses do. If I was a banker, I'd loan you money, and I'm not. I'm a farmer, and we can all be thankful for that. I do want to follow up a little bit on what Senator Merkley talked about, and that is that over the last week for a couple of days, I had several meetings, several roundtable meetings, small businesses with their bankers, their financial folks, with their contractors. It ran the gamut. I heard basically the same thing at every meeting, and that was that they needed money. They needed operating capital. They needed money for expansion. And then from some of the bankers, I heard because of potential overzealous regulators, they were required to mark down a lot of their assets that they had on the books, eliminate a lot of the capital they had. None of the banks in Montana took any TARP money. They're all community banks. None of them, they're domiciled, they took any TARP money. The question is do you think it would be wise for us to take a look at the regulators and say, why are you doing this at this point in time? Because it looks like you're inhibiting the ability for small businesses to grow. Or do you think it's a better option to go with what Senator Merkley talked about to recapitalize the banks, even though they don't want the TARP money?
I don't think it would be a good idea to interfere with the process, the regulatory process. I think that is a very important part of getting our economy back on track. We want to make sure our banking system is in good shape, and I don't know that interfering in that process would help in that regard. So I would not do that. Recapitalizing the smaller banking institutions, I'm not sure I would go down that path either.
Okay.
I think here's the fundamental issue. The fundamental issue is that as long as unemployment is rising and house prices are falling and commercial real estate values are falling, no one's going to lend. The banks, the small banks, the big banks, no one knows how much these folks are worth and where it's all going to end up, and so they're not going to do it. So we need to focus on that. And now it's kind of, you're saying to yourself immediately, well, this is a chicken and egg problem, right? And it is. But the way to break it, this cycle, is to become more of a direct lender. Say, just like the FHA stepped into the mortgage market and is now 50% of the purchase loan market, up from 10% in 2007. It's breaking that cycle in the housing market. You need to do that in the small business market using the SBA. Break the cycle that way. It's the most direct, effective way of doing it. And 97.5% is exactly what the FHA does with respect to mortgage borrowers. You and I, as a first-time home buyer, so why can't the SBA do that for small business owners that are not much different than you and I as a homeowner, at least temporarily? No, I think 97.5% for an FHA loan is not a great thing either, and I would move away from that over time once the private credit markets, lenders start to kick in. But in the interim, I think it's a very effective thing to do. So that's the way to break that cycle.
Thank you.